everyone, this is Blane Markham, Chief Trading Strategist, coming to you with my weekly market update, breaking down for you what I'm seeing in the markets, what's moving markets, where new trends are forming, and where we're spotting some opportunity out there. So there's a lot to break down here, so let's go ahead and dive in. And before we go ahead and hop into the chart here, of course, there are a lot of significant market moving events that's causing a lot of volatility in markets just here in the past couple weeks. Of course, everyone has probably seen this by now, but certainly the geopolitical unrest and uncertainty that's going on in the Middle East, the war that's broken out in Iran. This, of course, is causing a lot of turmoil in global energy markets. This is having a significant weight on equity performance, essentially in equity markets across the globe. So, of course, this is a quickly evolving situation, something that we're watching very closely because of the outsized effect that this volatility is having on stock prices. Of course, there's some other things more domestically that are having a large effect on the stock market as well. Of course, we've had some significant inflation reports here this week. We've had the CPI report here on Wednesday, the day that I'm recording this market update. Of course, upcoming on Friday, we have a really crucial PCE report. That's the Fed's preferred gauge of inflation. So that's certainly going to be a market moving event coming up this week. And all these catalysts combined are having a massive effect on U.S. Treasury yields here, leading to them spiking. So anytime you have energy up, you have Treasury yields up, you have the VIX up. That, of course, has been a bad mix for stock prices, and we've seen that reflected in the price action here. Of course, looking at the chart of the S&P 500 here, just to get a good feel of the overall temperature of the markets, kind of get a feel, broadly speaking, of how stocks are performing. And you can see, looking at this chart, we're starting to form a more consistent series of lower lows and lower highs. That is abundantly clear in the trading of the past 2 months. You can see that ever since the markets peaked out in January earlier this year. You can see that's the last time we hit a new 52-week high. Really, ever since then, we've been in this slower grind lower. We were largely range bound for a while. Then we saw that ceiling. We were starting to run into resistance drop down from 7,000 down to 6,900, then down to the 50-day moving average. It was kind of slowly stair-stepping down. Now we started to form this very clear series of lower lows and lower highs, at least here in the short term. That said, of course, the longer-term trend is still intact. We are still seeing the index trade above the 200-day moving average. We started to get close to testing it. We did actually see the NASDAQ test its 200-day moving average the other day on Monday, and it was a successful test thus far. And of course, we're still seeing the same thing here with the S&P 500 with the index remaining above it. But as you can see, the trajectory of the current index price action and that upward sloping 200-day moving average in our green line right here, it certainly seems that the two of these are on this collision course that I've been talking about for the past couple weeks. So we're certainly watching out for a test of the 200-day moving average, and it'll be very important to see this index hold up above that key support level. But that's the key support level to the downside that we're watching for, is right here, roughly around 6,600, where the 200-day moving average is. Of course, that also dates back to this low back in November of last year where the market found support. So that is a pretty clear level of support below this market right now, but also there's certainly some very significant overhead resistance for the market as well, too. So as I mentioned, you can see the series of lower highs developing here and the series of lower lows, but you can see every time the market recently has traded up to this middle Keltner channel here, that's our dotted blue line. All that middle Keltner channel is a 20-day exponential moving average. So every time it trades up to that 20-day EMA, you can see that is a clear point of exhaustion for this market, as it has failed at that level on numerous occasions over the past month. So the overview here is the technicals are telling us still in a long-term uptrend, but in the short to intermediate term, the picture is definitely starting to look a bit more murky and uncertain, as the price action has decisively begun to start turning lower. Now, with that said, of course, too, we are only just a matter of a few percentage points off the all-time highs of the market, not even down a full 5% as of the close on Wednesday. So despite all the volatility, all the headlines, all the noise going around this market, we still are only just barely and marginally off of the all-time highs for the S&P. That is one very encouraging note here as we're dealing with all this market uncertainty. Now, with that said, we are still continuing to spot some very strong bullish and now also bearish opportunities across the market. And that's actually what I'm going to cover next for you, is one area that we're starting to see some really strong opportunity to the downside start to pop up on our screen. And so what we're looking at right here, you can see this downward sloping line. What this chart is actually representing, this is a ratio chart between the XLF financial sector ETF and just simply the S&P 500. So looking at this ratio chart, all it is doing is helping us gauge the relative performance of one asset compared to another. So in this case, we're comparing XLF, the financial ETF, to the S&P 500. And all you need to know here, what the really important takeaway is, whether this line is either sloping up or sloping down. You can see this is looking at the past year's worth of trading. You can see for much of the past year, this line has been almost sloping down the entire time. There's been a couple pockets here or there where this line started to slope up. But what this is signifying, since this line is sloping down, that is signaling that the XLF ETF, ever since this peak in relative performance back here in April of last year, ever since then, you can see that the S&P 500 has actually been outperforming the XLF ETF. It means the financials, the XLF ETF, has been underperforming relative to the S&P 500 index. So that's what this downward sloping line here means. You can see we had a brief period of outperformance right here from November through the end of last year. And then, of course, this year, you can see the relative performance peaked again right here and started to trend down, actually breaking down to new 52-week relative performance lows. You can see there's a very significant trend of underperformance that has developed here in the financials, and this presents us some opportunity to have some attractive trades to the downside. Now, if you go ahead and zoom your chart out, this is only just looking at the past year. I do want to point something out, that this is such significant underperformance from the financial sector. This is actually now starting to push up against multi-year support. If you look back to 24 here and all the way back to 23, a few very volatile times for the market, you can see these are actually the relative performance lows for the financial sector compared to the S&P 500. So you can see now at this current level, we're starting to push up against that support level. But given the trend of the financial sector recently and some of the headwinds that are currently facing that sector, I think there's a good chance that we actually break through that level of support. And if we see this relative performance chart break through multi-year levels of support, that's going to be a very significant signal to the downside. So from a directional trading perspective, of course, we're continuing to watch the financial sector very closely, spotting some brand new opportunities to trade financial stocks to the downside and gain some exposure to bearish trends in our trade alert services. Now, with that said, I'm going to go ahead and pivot to another setup that we actually spotted just this past week. Very different setup right here. Looking at this chart for Cisco, seemingly, looking at the price action for the past, call it 4 months since midway through November, really not too much to get excited about. The stock has largely remained range bound, stuck sideways, kind of traded neutral, but that's exactly what made this chart stand out to us. In our weekend winter trade alert service, we target stock charts just exactly like this one here for Cisco, seeing a stock that's trading sideways and one that otherwise would be considered a pretty boring chart if you ask most people. But again, when we see a chart set up like this is screaming opportunity for us when it comes to our weekend winter trade alert service. So with this, we spotted this setup last week. We actually sent out a trade alert to our weekend winter members on Friday, just in the final couple hours of the trading day, just before the close for the week. And the alert was for the members to go ahead and enter a position in Cisco to hold over the weekend and look to exit shortly after the weekend once we got into the new trading week. So we put this position on, we held it over the weekend, and come Tuesday, you can see Cisco had a bit of a drop on Monday. Tuesday, we had a bit of a rally right back to the sweet spot, right where we were hoping this stock would be trading at. And we actually sent out the exit alert to our members earlier in the trading day on Tuesday. So again, this is a stock that was roughly exactly flat from the time that we sent out the alert to the time that we actually exited the trade, just a couple of trading days later. And despite the flat performance in the stock, the trade alert that we sent out to our members actually produced a profit opportunity of 21.1%. Arguably, I would say a pretty great return for a stock price that was essentially exactly flat. Again, this trade was only held for 2 trading days. Now, we've been spotting setups just like this one all across the market and been sending out alerts to our members for many of the past several weekends. And in fact, of the past 11 alerts, just like this one we sent out to our members, 10 of those 11 have ended up producing profit opportunities, and we're winning trade alerts for our members. So despite all this market volatility, all the noise, all the uncertainty surrounding this market, we're still continuing to find some great opportunities just like this one, and stock charts that otherwise look pretty boring and are trading sideways and are flat share prices. So I certainly hope that you were able to follow along with this trade alert for Cisco and all the other ones the weekends prior. But if you're not able to follow along with our weekend winter trade alert service, no worries. Just go ahead and reach out to the FFR trading team. Please go ahead and give them a call. And please, once you go ahead and call in, ask them all about the strategy, ask them all about the service. They're a great team. They're there to help answer your questions. And most importantly, they can go ahead and get you signed up so you begin receiving these weekend winter trade alerts, just like these ones I share with you here today, as we head into the upcoming weekend. Now, this concludes my weekly market update for this week. I hope you enjoyed tuning in this week. Thank you so much for watching. I really appreciate you tuning in to hear what I had to say and the things I had to share about the market. Again, I mentioned earlier on in the update the things that I'm watching very closely now here in the weeks to come, as I certainly think they're going to be catalysts. They're going to have a significant impact on price action across the market. So again, thank you so much for tuning in. Hope you have a great rest of your week and weekend. I'll be looking forward to put this together for you again next week. So until then, take care, everybody. Best of luck trading, and see you back here soon.